Hello, ladies and gentlemen. Greg Michalowski from Forexlive.com. Today's date is December 16th, 2022. It is Friday. This morning report takes a look at some of the fundamentals and technicals that are driving the Forex markets. So let's get started. Well, it is Friday, as mentioned, and this week has been pretty important one, I guess. We saw CPI come out in the U.S., which was weaker than expectations. That got the market all thinking that the Fed might have to lower their expectations for the terminal rate. Not so fast. They raised it by from 4.6% to 5.1%, and now I'm looking at comments from Fed's Williams saying things like that. I don't think that we need to move the terminal rate to 6%. They just said 2 days ago they thought the terminal rate was going to be 5.1%. So he can't even support that for anything more than a couple days. And also said things like possible the Fed will have to hike more than the FOMC terminal rate forecast. Again, that was just 2 days ago, so can't even support that. We're seeing good news in inflation data. Core services inflation remains an issue. U.S. not in a recession. Doesn't see it falling into a recession. Tell that to the bond market. But ECB, meanwhile, they were more hawkish yesterday with a 50 basis point hike. But with Lagarde being probably more hawkish, I've heard her speak, saying that there are significantly more hikes down the road. And then we later learned from sources that there was a expectation, there was at least a third of the members who wanted a 75 basis point hike, and she bartered 250 basis point hikes, which maybe means 3 if the inflation doesn't come down fast enough, so on and so forth. So that was more hawkish, and initially the euro versus US dollar moved higher on that higher rate idea, and then fell sharply after they're like, well, this is going to lower growth more than what we expect. So it's everything's out there. We have Bitcoin issues. Finance's auditor who said just last week or this week that their situation is in order as far as their deposits and such go. Is now leaving the crypto auditing business, or at least putting it on hold, which has the markets scratching their heads a little bit. What do they know? What are they not telling? That type of thing. So there's a lot of balls in the air, folks, and that is likely to be translated into volatility in the Forex market as well, which leads me to technicals, because technicals help to tell the biases. Even if it does whip around, you can trade the market with the biases from technical levels intact. So let's, with all that said, let's take a look at the euro versus US dollar and some of the major currency pairs. And what I outlined this week was this swing area through here off the daily chart, where there is a number of different swing lows and highs all through this period, going from April to June. The market was consolidating in this range right through here, and then finally in the month of June, the price started to use this level as resistance, and then broke to the downside, falling to our low price that we saw in the end of September. And then we started this rebound to the upside that saw the price move above the 50% retracement, and indeed the getting above that 50% retracement on this day right here. This is CPI day, after trading above and below the 50% retracement every day of the month of December, was a clue for the upside. And then we moved above this swing area in the process, and moved up toward the 61.8% retracement. And trading yesterday, we got within 11 pips of that target on the top side, and then rotated back to the downside. And where do we find support? Well, we found support against this swing area once again, right here near the 105.94 level, and the market bounced off of that level. And you can see we're trading within the swing area between 105.94 and 106.40. So watch the move above the 40 level. Should be more bullish, but we were there today, but could sustain it and move below the 105.94. Could have traders looking back toward the 50% retracement on disappointment on the break of this swing area. On the top side, we have the 61.8 on the daily chart as a level to aspire to if the euro should decide to go higher again. So looking at the hourly chart, you can see there is some support here against the 100-hour moving average. Yes, the market has dipped a little bit, a few pips below that moving average both yesterday and again today, but no momentum on the downside, including the last 2 hourly bars when the market came down to the 100-hour moving average, currently at 106.147. So from a technical perspective, if you're unsure about which way we're going, higher or lower for the euro versus US dollar, this can be your barometer for bullish or bearish. If we see a break below that level with momentum, we can look toward this swing area on the downside. Somewhat corresponds with that level off of the daily chart, where we came down to the low price of that swing area through here. So this area, the 50% retracement, the move up, so on and so forth. All of it comes into play here. And yesterday, that's what caused the market to bounce to the upside. Now we have a higher 100-hour moving average to deal with, and then we're going to still look at the 50% and all these areas through here on the downside, which will also correspond with the levels on the daily chart. So it's all in front of us. Stay above the 100-hour moving average, and we could see this rotation back to the upside. Maybe we go up to here. Maybe we go up to here. Maybe we go up to here. I don't know, but it'll be a progression. But the first things first, got to stay above the 100-hour moving average. You can't do that, then it's not going higher. Let's take a look at the dollar versus yen on a daily chart. This week, we did see the price move below the 200-day moving average right through here, and we did it earlier in the month of December as well, but the market could not sustain momentum below that level, and the price moved higher yesterday after finally the dollar said, well, actually, despite the stock market going to the downside, the dollar yen moved to the upside, and yields actually went lower as well yesterday, which is kind of confusing as well. But the U.S. dollar went higher, or the dollar yen went higher following the dollar's overall bid. Today we're a little bit lower again in the dollar versus yen on the daily chart. We'll see what that looks like on the hourly chart. And looking at the hourly chart, I have earmarked here a swing area between the 137.48 and 137.85 level. Again, a number of different swing levels through here, here, a little fail break above there, and a fail break above it yesterday as well, with reestablishing the level against that the top side of that level here. We are below that area right here and above the 100 and 200-hour moving average. I would probably focus on this hourly chart, these levels right through here. This is our resistance. This is our support. We're trading in between those levels, and we'll see which way the market wants to go, but we are lower on the day, so maybe go down and test the 100, 200-hour moving average, but maybe we don't. Maybe we go back and test the 137.48 level. It's your call. The breaking below this level was probably the trade of the day. As we switch the bias back to the downside, but we'll see how it goes, and it might be the stock market kind of draws the market's attention here today in the dollar versus yen, and forces its move to the downside. But right now we're seeing stocks down. We're seeing the dollar yen down. The swing to the relative safety of the yen may be the storyline for today in that currency pair. Let's take a look at the sterling versus US dollar next. And if we take a look at the daily chart for it, what we see is the 200-day moving average was tested and trading here today. That level comes in at 1.20988. Going to our hourly chart, the low price came in around 1.2119 or thereabouts. You can see how close we got to that level. If we take a look at the take this out here, but if we the low price also was close to the low price that we saw back here on December 7th as well. So pretty decent support down here targeted, and that would be where we need to get to and through. Of course, we're not anywhere near that level now as the market bounced up, and we bounced up in toward this swing area through here, where again we have a number of different levels going back in time. Now I'll go back in time now, where it sort of all started over through here, where the market found just these areas where the buyers and sellers used as resistance or support, and move the market either to the upside or the downside, depending upon which way it was going. Now, there are, of course, times where the market did not do what you expected it to do, like right through here and right through here. But as you can see, in each times when the market moved below this level, what did we do? We found support against the 100-hour moving average and moved higher. So it's sort of a combination of let's go test the 100-hour moving average and move the other direction, and then they reestablished support buyers ahead of this level, pushing the market to the upside and trading. Yesterday, the price was finally able to get back below that area, and we started to use this level as resistance, and including the last few hours where the market moved back up to that level, found the sellers against that level. So the bias is shifting more to the downside below this area through here. We'll see if that momentum can continue on the downside and push again back toward the low price from the December 7th and also the 200-day moving average on the downside. So I've overstayed my welcome. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.